Okay, let's read that one. For the fixed deposit, can you please read the transaction for us? That one for fixed
The fixed
deposit.
deposit was
And also, uh, please raise the money. Okay, you can proceed.
the fixed deposit was invested on the 2nd July 2019 for 3 years. Interest is not capitalized.
Mm-hmm. Let's draw up a financial layer so that we can understand this one. Yeah, yeah. Kind of when does our financial layer ends? On the 28th of February, right? 28th of February. 2020. Meaning it began when? It began when? On the 1st of
March.
March. On the 1st of March 2019. Let's go read our transaction. The fixed deposit was invested on the 2nd of January 2019 for 3 years, meaning we invested it when in a previous year, basically. We invested that thing on the 2nd of January 2019. 2nd of January does not fall within our financial year because our financial year began in March. But then we invested our thing when in January. So they say that we invested it for 3 years. So simply means that this year we are supposed to receive the interest for that whole period of 12 months. And they say that they invested it for 3 years. For this year, we will have to calculate the interest for 12 months. So how are you going to do that? You will say what? It's quite simple. Let's check our fixed deposit. You will say your fixed deposit multiply by your rate multiply by 12 over 12 because you're going to receive interest for the whole 12 months. The whole 12 months. Let's check our fixed deposit. How much is our fixed deposit? Our fixed deposit basically is 750,000. Therefore, we'll say 750,000 multiply by our rate. How much is your rate? It's 6%. Multiply by 6 over 100. Multiply by 12 over 12. And then we'll get our interest. Interest income. The interest income that you'll get here, let's calculate it. 750 multiply by 6%. In which we get 45,000, right? So 45,000 rand basically, this is your interest income. So interest income that you are supposed to record this. This is your final answer for interest income. Your interest income for this current financial year is 45,000 rand. This will be your final answer for interest income. So the interest income that we have incurred will be 45,000 rand. Right? You can, I think in brackets, you can maybe have the calculation. Wherever we said 750, right? 750 times how much? Times 6 over 100. And also times 12 divided by 12. And then that will be your interest income. Do you have questions with regards to it?
Everything is clear.
Okay, let's go to the other one. The rent includes the rent receipt for March. This one talks about rent. What is the first thing that you will do with regards to this transaction? It talks about rent. Okay, you can answer.
It's for the question at the previous transaction that we did. What does it mean when what does the word capitalized
I
kind of
think
mean?
it's not that paramount, because in some instances they will say not capitalize the capital. It doesn't matter. That phrase or word is there just to confuse you. If ever the transaction talks about interest and fixed deposit, just calculate it and don't put more emphasis on that word. We take that so income statement.
Okay.
Capitalized basically interest is capital. Interest is not capitalized. Simply means that your interest does not increase your debt. Interest is not capitalized. Interest does not increase the debt. Interest is capitalized, meaning interest increase the debt. But then hence I'm saying that when we do our income statement, it's not really a necessity as such. It's not really a necessity. But hence I say that maybe when you calculating fixed deposit or even loan, they'll see that interest is capitalized, interest is not that paramount. Did I answer you? Very clear.
Yes, sir.
Okay, let's deal with this one for rent. When dealing with a rent transaction, what's the first thing that comes into your mind? Or what's the first thing that you do?
I draw my financial year.
So tell me your financial year. When does it begin? And also when does it end? So
Um,
that I can draw it.
it starts on the 1st of March and ends on the 28th of February.
Okay, let me draw it. You said that it ends on the 28th of February, right? 2020. And then you said that okay, I did draw up my financial year. And then after that, what do you do? Go to a transaction.
Um, yes, and then analyze how many months did you receive extra in advance?
So how many months did you receive it in advance?
1 month,
1 month. We received it up until when? Up until
March,
meaning we received rent for how many months this year?
for 13.
For 13 months. 13 months. Okay. From here up until here is 13 months. 13 months. And then also what do you do? Read the remaining statement. They say that the rent income increased by 1,400 on the 1st of January 2020. What are you going to do with that part?
I'm gonna note it like on my financial year,
When did it increase?
the plus 1.4 on the like on the 1st of January.
So it increased by 1,400.
1.4.
So this 1,400, did you only pay it for January?
No, for 3 months, which is January, February, March.
Mhm. Meaning you paid your increase for 3 months. And then the other thing that you will do, what will be? What are you going to do? What is the rent income
I'm
that
gonna
you
go
have
to
in
my
your trial
trial.
balance? Okay, let's check. Let us check.
I did not.
Check your income statement that you wrote and tell me the rent income that you wrote. You have rent income in your book. How much was it?
368,200.
300?
68,200.
368? Is 368? Ma'am, 368?
200.
How much?
368. 200.
And then what are you going to do next? So that is the rent income that they recorded in our trial balance. Secondly, what?
I think we're gonna minus the 1.4, say 3.
Okay, maybe can start by, let's say 1,400 multiplied by 3. So that we get how much are those 3 1.3s? 3 1.4s. So how much do we get when you say 1,400 multiplied by 3?
4.2, 4,200.
4,000?
200.
So those 3 1.4, they add up until 4,200. You said that? You say 368, 200 and minus them, right? And minus them. And then how much are you going to get, K?
I'm gonna get 364,000.
Question is, why did you minus those increase? Because I'm a
So
little
I
bit
can find
perplexed. So
how.
why did you minus them?
So I can find out how much I have been paying my rent without like an increase.
And then after that, what are you going to do? Or are you done with it?
I know I am not done. What I think I'm gonna do is I'm gonna divide by like 13 to see how much I've been paying for the whole 13 months.
They said that you also divide by 13 months. Then when I divide, I get 28,000. And then we get 28,000 rand. And then is there maybe another step that we have to do? Or we just end it here? Or kanjani? Because that also nani. I'm eager to know.
I think we're gonna add back the 14,000, the 1.4 to
Okay,
get the initial amount that we have to take out.
28,000 plus 1,500. Say that you say 28,000 plus 1,500.
Which is 29,400.
Then we get 29,500. Can you say that this 29,000 rand? What are you going to do with it?
Yes. I'm gonna minus it in my running income.
Yeah, so that's correct. What did you start by doing? You said that 1,500 multiplied by 2, in which you got 4,200. You said that 360,000 minus 4,200. The main reason in which you did that, you minus those increases so that you can clearly see that for 13 months, how much was the rent income that we were supposed to receive without an increase. And then we found that good, without an increase for 13 months, I was supposed to receive 364,000 rand. And then you say 364 divided by 13. So that we can clearly see that each and every single month, how much was I supposed to receive without an increase. And then you go 28,000 rand, meaning before increase, you was receiving 28,000 rand. But then after increase of 1,400, how much was you receiving? You was receiving 29,400. In which it was a perfectly great answer. So that 29,400, as you've said, will minus it here.
Yeah.
29,400 minus. Yeah, that's correct. Yeah, that's definitely correct. Therefore, say 368,200 minus 29,400. And then you will get 338 800. Mm, yeah, that's correct. You also get the same amount.
Yes, yes, I also do.
And then let's fixed asset and also depreciation. And then H, is this our last transaction? Okay, let's focus on our depreciation. Do you still remember depreciation? Fixed
I
asset and also depreciation. You don't think you know it? Well, yes. And the details for the two vehicles are as follows. Our business has two vehicles. We have vehicle one, in which had a cost price of 300,000 rand. And then accumulated depreciation on the 28th of February, meaning the accumulated depreciation at the beginning of the year. The accumulated depreciation at the beginning of the year for that asset, it was 280,000 rand. Okay. And then you bought it on the 1st of July 2014. Okay. And then the second one that you acquired was 750,000 rand. But then at the beginning of the year, it does not have an accumulated depreciation. Why it does not have accumulated depreciation? Because of the fact that we bought it on the 1st of November, meaning we bought it during the year. That's what you know. So we have to calculate the depreciation for that particular thing. So let's calculate it. So we are using which method? Vehicles are depreciated at 20% per annum on cost. Simple, right? So let's start with vehicle one. We'll write it as V1, right? V1 had a cost price of how much? Of 300,000. And then remember vehicle one, we did not buy it during the year, right? We did not buy it during the year. Check and also check the accumulated depreciation. The accumulated depreciation at the beginning of the year, it was 280,000 rand. And check the cost price. It's 300,000 rand. So you can clearly see that cost price and also accumulated depreciation are almost similar. Are almost the same. So it's probable that for vehicle one, we'll use what? 1 rand rule. So let's calculate the depreciation for vehicle one. We'll say 300,000 rand. Are you still following?
Yes, sir.
300,000 multiplied by 20%. Multiplied by 12 over 12. Therefore, how much do we get? That's our depreciation for vehicle one. 60,000. I think you're supposed to get 60,000 and 20%. Do you get
I
60,000?
also got it.
There's a depreciation
Yes, sir.
for vehicle one. But then let's check whether we have to use 1 rand rule or not. So remember 1 rand rule, you use it when your accumulated depreciation is more than when accumulated depreciation for a particular asset is more than the cost price. So the accumulated depreciation at the beginning for vehicle one was 280. So when you add 280 plus 60,000 rand, how much do you get? I think we get 340. We get 340,000 rand. We get 340,000 rand. So this is the accumulated
That's what I
depreciation
got.
for that asset. And then I'm asking yourself, is it possible for your accumulated depreciation to be more than your cost price? The accumulated depreciation is 340, but then the cost price is 300,000 rand. Is it possible? It's not possible. You can never have a negative asset, right? It's not possible for your accumulated depreciation to be more than your cost price. In that situation, since our accumulated depreciation is more than our cost price, we'll have to introduce 1 rand rule. How do you introduce 1 rand rule? Basically, we'll say carry value at the beginning minus this will not be our depreciation. This 60,000 rand will not be our depreciation. We clearly saw that when we add 60,000 by the accumulated depreciation at the beginning, we get a value that is more than the cost price. So that 60,000 rand will clearly not be our depreciation. So how are we going to deal with that? How are you going to deal with that is that you will say carrying value at the beginning. How much is our carrying value at the beginning? We'll say 300,000 minus 280. I think when you say 300,000 minus 280, we get 20,000 rand. Therefore, 20,000 rand is our carrying value. That 20,000 rand will just minus it with rent. And then we'll get the depreciation for vehicle 1, in which you get 19,000, in which you get 19,999. So 19,999 with the depreciation for vehicle 1. With the depreciation for vehicle 1 there. And then for vehicle 2, are we good with vehicle 1?
No, Chair.
Are we good? Yes, we are good. No, we're
Everything
not good.
okay.
Okay. Vehicle 2, let's do vehicle 2. The cost price of vehicle 2 is 750. We'll say 750,000 multiplied by your rate. How much is your rate? Your rate is 20%. Multiply by 20%. Multiply, remember that one you only bought it during the year. Therefore, you do not use it for a period of 12 months. Therefore, for this current financial year, we will use our asset from the 1st of November up until the last day of the financial year. For this current financial year, we will use our asset from the 1st of November up until the last day of the financial year. Therefore, it will be November, December, January, February. So we only use it for 4 months. To save, multiply by 4 over 12. And then we'll get the depreciation for vehicle 2. So we'll say 750,000 multiply by 20%, multiply by 4 divided by 12, which will get 50,000 rand. Is that correct?
I also got it.
50,000 rand will be your depreciation. So let's go add those depreciation for vehicle. After we'll do the one for equipment. So depreciation 19,999, right? Plus 50,000. So please always be vigilant about your 1 rand rule. So let's go to the other one, which is our equipment. Equipment was sold on the 31st of August 2019 for 11,000 rand. The details from the fixed asset register were as follows. So during the year we sold our equipment, cost price of that equipment that we sold is 25,000 rand. And then they also provided you with the accumulated depreciation when at the beginning of the year. And then they gave you pro rata depreciation for the year. And then accumulated depreciation on the 31st. I think this one, they already calculated depreciation for you. I think this one for equipment, it was good. This fixed asset register, basically, these are the details of that equipment that you sold. They give you the cost price at the beginning, which is 25,000 rand. They also provided you with the accumulated depreciation at the beginning. And also they give you the depreciation for the year for that equipment that you sold. The depreciation is how much? 915,000. And then they gave you the aggregate depreciation after you sold your thing. The aggregate. How did they get 13,715? They got 13,715 by saying 12,010 rand plus 915. But then we're not interested in those accumulated depreciation and so forth. Tina, our main focus right now is all on depreciation. So we'll not use our brain too much since they provided us with our depreciation. So for depreciation of that sold thing is 915. So we'll say plus 915. There's no need for you to calculate it. Plus 915. Simple. And also check under your table there. Depreciation on the remaining equipment is calculated at 21,630. After solding, remember that after solding our thing, we were left up with what? All the remaining. All the remaining, these are assets that stayed in our business for a period of 12 months. They also calculated the depreciation for you. It's how much? It's 21,630. Therefore, here you'll say plus 21,630. And then that's it. So for equipment, they already calculated for you. So in this situation, let's say our depreciation aggregate 19,999 plus 50,000 plus 950 plus 21,630. In which you'll get 92,544. And then that one, and move from it. This one, we have to calculate our interest expense. Remember that when we calculate our loan at the end of the year, we say that the loan statement received from BB on the 29th of February 2020 indicated the following. They provided you with balance at the beginning, the repayments, and also interest capitalized, and also balance at the end. How do you get the balance at the end? How do you get the balance at the end for loan?
Balance at the beginning, we're gonna
Balance at the beginning?
take the balance.
Okay,
and
maybe
then
you
we're gonna
or you can calculate the interest on loan for us. Maybe you can attempt it and tell us how we will get it. Wait. Okay, are you attempting it?
repayments are always like a negative, right?
Yeah.
Okay. So
How do you get the balance at the end?
I'm gonna say balance.
Okay, let me not
I'm gonna give you the interest
okay,
capitalized.
yeah, you can give me the
It's
interest.
gonna
Sorry
be
for confusing you there.
balance at the end of the financial year, and then I'm gonna plus it with the repayments, and then minus it with the balance at the end, at the beginning, and then it gives me like the interest capitalized.
That's correct. For us to get balance at the end, we know that we share balance at the beginning minus repayment plus interest. So we know that when we start from the bottom going upward, we do vice versa. So for interest on loan, interest expense, how much was the balance at the? We'll say balance at the end. So therefore,
Can you please like go back?
we'll say 1,984,000, right? You said that's what you said. 1,984,000 balance at the end plus our repayments, meaning plus 900,000. That's balance at the beginning. How much is our balance at the beginning? Minus 2,509,000. And then how much did you get there? 10 million interest expense for the year. Ma'am?
It's 375,000.
Confirm. That's correct. Let's check this one. Income tax for the financial year was calculated as 520,800. That is your income tax. So write it here as your income tax. It's 520. And then our income tax rate is 28% of the net profit before tax. Our income tax is what is the rate? 28%. Is 28% of what? Of net profit before tax. 28%. Remember that we know that our profit before tax is 100%. Right? Remember those percentages. We said that for us to get our net profit after tax, we'll say 100 minus 28, in which we get 72%. And then at this stage, we'll just manipulate or play with our figures. We'll use our traditional formula of amount multiplied by what I want over what I have. The amount that we have is 520, 800. Multiply by what I want. Let's just say we're looking for net profit after tax. We'll say multiply by 72 divided by what I have. What do I have? I have my income tax, which is 28. 72 divided by 28. And then we'll get our value here. We'll say 520, 800, multiply by 72 divided by 28. And then you'll get your what? You'll get your income tax as how much? As your net, you'll get your NEPAT, net profit after tax, x 1,339,200. And then let's just say you're looking for net profit before tax. You still use the very same thing. Amount multiplied by what I want over what I have. Before tax, you will say I'm looking for 100 divided by what I have. I have 28. And then you'll get your value. You just have to play with your calculator. 520 multiplied by 100 divided by 28. And then you get 1,860,000. Is that correct?
Yes, sir.
1,860,000. And then at this stage, we can calculate our profit before interest expense. Can calculate our profit before interest expense by doing what? By starting from the bottom, going upward, right? When we start from the bottom going upward, we do vice versa of what you normally do. When you start from the bottom, going upward, we do vice versa of what you normally do. Therefore, we'll say 1,860,000 rand. Are we going to minus that 375 or are we going to add it?
Can you repeat?
I said that, okay, for us to get, how are we going to get our interest income at this stage? Do you have any clue on how we will calculate our interest income?
So we're gonna take our
Or how do we get our profit before tax? Our net profit before tax, how do we get it? Let's just say we're studying. Okay, let me answer you because it seems like. So for us to get this value, normally when we had all these things, normally for us to get our what? Our profit before tax. We will say profit before interest expense minus our interest expense. And then we'll get this value. For us to get our profit before tax, we say that profit before interest expense minus our interest expense. And then we'll get our profit before tax. But then in this situation, you don't have this value. So I told you that you will do vice versa of what you normally do. Vice versa meaning you say 1,860 plus 375. 1,860 plus 375. And then we'll get your profit before interest expense. 1,860 plus 375. And then it's 2,235,000. How are we going to get a operating profit? We know that for us to get a what? For us to get profit before interest expense, for us to get this profit before interest expense, we normally say operating profit plus interest income. But then in this situation, you are not starting, you're starting from the bottom going upwards. So we'll do vice versa of what we normally do. Therefore, we'll say 2,235 minus 45,000. And then we'll get our what? We'll get our operating profit. Therefore, operating profit will be 21,900,000 or 2,190,000. Remember that your sanitary expense is your balancing fee. Your sanitary expense is your balancing fee. The sanitary expense is your balancing figure. So let's calculate the missing figures. Let's start with our sales. How much will be our sales? I think it will be, you'll say 21,630,000 minus 130,000. And then we'll get 21,500,000. And then our cost of sales, still the same. 15,150,000. Please confirm sales. Is it 21,500,000?
Yes, because we didn't have our
Okay, so let's minus our sales with cost of sales. So say 21,500,000 minus 15,150,000. And then we get how much? 6,050,000. And then let's add our income so that we get the total of other income. Let's add our income so that we get the total of other income. We'll say 4,400 plus 338,800. And then we'll get our other income as how much? As 343,200, right?
yes, sir.
And then they can get our gross operating income. How can we get a gross operating income? By saying gross profit plus other income. Let's add them. Are you adding them?
It's